Morning, everybody. Slower start to the week here, second to last week of August. Not a lot of data. Market pretty flat bond wise. We'll talk about the market at large here in a minute. Dwarfs roll today. 8:30 data is just New York Fed. I don't want to say I love New York Fed, but I certainly keep an eye on it. We've got some housing at 10. We'll talk a little bit about Friday's action. Before we get into that, let's talk about the overnight. In terms of Iran, I think our negotiation period ends today or tomorrow. So that potentially causes or will cause some consternation if we don't get to the table in a serious way. Doesn't look like that's going to happen for the record. Overnight, Asian stocks broadly better. European stocks a bit more mixed, as we are indicating here on shore. As we've kind of seen on a number of days, sort of Dow and Russell slightly disconnected from NASDAQ and S&P. Dow Russell indicating down, NASDAQ S&P indicating up. VIX up considerably, almost 5%, but still at 1493. So at least compared to lately, a reasonably subdued level. Bitcoin up a bit, 63. Commodities. Crude down, but at 82. Brent up at 88. Dollar mostly worse across most currencies. And bonds flat-ish across the board. 10's 473. I've got to tell you, and you know, above the kind of before the number levels or before the numbers levels. So that's sort of interesting. I mean, we are at support-ish. You know, if you were to pull a 5-day chart, you would see that. So we are around support on 10s. As you can see, 2's holding up better, which is one of the reasons why MBS is holding up better. You know, lower end of the coupon really was the one that got hurt in Friday afternoon sell-off. We are, call it 50 basis points worse on 5s. 5.5s are maybe in the vicinity of 30, 25. Whereas 6s and 6.5s are, you know, I mean, you could say that we're an eighth worse. I don't know that we're literally an eighth worse. I'd call it more. Well, yeah. I was going to say you could say we were a quarter worse. I'd say we're closer to an eighth worse, 3-4 ticks, something like that. So what the heck happened on Friday? You know, I'm not 100% certain that we're going to know for sure, right? Other than, and we talked about this, and if you were with me live, or for that matter, even if you watched on replay, although you have a little less context, when I was talking about this sales number being really, really good for rates long term. But based on the action we were seeing, and you heard me call it kind of live with Seth, and I forget exactly what we covered. I want to say 5s and 5.5s. I think we definitely covered 5s. And we find ourselves, just for full disclosure, a little bit short here this morning. Hold on one sec. Let me just give you New York Fed. Wow, a little bit of a hot number, and that's why bonds were ticking slightly worse. Last month, 15.6, we expected 11, came in at 20. Not going to get into any of the components there, but we find ourselves basically short dwarfs and short 5s, 5.5s, and 6s on the Ginny side. We continue to be long 6.5s. Trying to kind of find some middle ground on that as we approach this roll, which has been, the drops have been pretty wide. So kind of hesitate to put coverage on. But, you know, you saw the hesitancy to trade what was seemingly a pretty blockbuster number. I mean, And it's funny, everything that we said, and full disclosure, not saying that he ripped me off, more along the lines of sort of a great minds think alike statement. But for those of you that subscribe to Mortgage News or MBS Live, Matthew Graham's post after the number was pretty word for word exactly what we were talking about here, which is retail sales has become an increasingly more important number. I might categorize it as an A minus, B plus sort of number. I forget how exactly he worded it, but he put it in top 5, top 10. It didn't disappoint. The number was terrible across the board, except, and we talked about that, except, I didn't love some of the energy numbers in there were pretty negative, which could take a little bit of the edge off of the negative headline core, super core numbers. I found it, as we discussed, quite interesting that in a month where you felt like oil prices were higher, although I warned against that and how it might not impact inflation. Like that's sort of the good news, right? The good news is that these numbers were bad because we were right on that call. The bad news is that maybe these numbers weren't or won't be as bad as folks would want to see them because we didn't see that impact that maybe folks were bracing for. And the idea that to whatever extent oil prices hurt August more than they hurt July, that, ultimately we want to see really, really bad numbers. And in the absence of that, you have some concern. So, was it that on Friday? Was it some Fed speak about, feeling like we need to play some protect? I think that there was some talk of, we should raise rates now, which is preposterous, by the way. But, it was one of those where hopefully you saw what was going on and you took down some coverage before there were any reprices. By the way, for the record, we didn't see that here. We had a really good week for locks on a relative basis, and Friday was not. And Friday was worse week over week. And, I hate to say it, but we see that. And if I could sort of really discourage that, and what I've tried to do over the last, whatever it is now, 8 months, I've noticed that phenomena among originators is sort of the more emboldened you get because, rates are moving in the right direction, the more risk you take. Whereas, following that adage of no one's ever lost money taking a profit. We took some profit on Friday. We talked about taking profit on the near-term closings. By the way, could care less about Friday's action for September closings. Meaningless. Absolutely meaningless. But talking about August and not locking yourselves down for August, I think you gambled and you lost if you did that. The good news is 6 coupon, 6.5 coupon for the most part, really in pretty good shape. So let's talk about today, this week, next week, and where we go from here. Long story short, you're back in the less value territory for fives. 5.5s are so. I think you're okay there. And then I think 6s and 6.5s, you have some pretty good value there. So if you took on floats last week, and you didn't lock, right? I think that, and really across the board, potentially the story that you have to tell is, hey, we're kind of in the money here. We potentially dodged a bullet on Friday, and so therefore maybe we lock here. Certainly if it's an August closing. From a data perspective, this week, tomorrow we have ADP and more housing numbers. And listen, to whatever extent we're going to predict some weaker housing numbers today and tomorrow, will that maybe help? I think it helps anecdotally. I don't think that the housing numbers have anything at all to do with Fed policy, but do they have to do with how folks feel And we'll talk about Friday's Michigan sentiment, which came out after we got off. I think this housing data at 10 today and 10 tomorrow could impact how traders feel about forecasting the next wave of data and how that might impact Jackson Hole, which comes before the data, but then the next Fed decision, which comes after the data. Friday sentiment, 1-year inflation expectations, as you might imagine, higher. Here's what's interesting. Business conditions, 54.8, expected 55, came in at 51.8. So much worse month over month and versus expectations. 5-year inflation came in. Inventories flat but revised up, so a net wash. Consumer sentiment way down. 55.2, expected 54.5, came in at 51. Now, I'm not going to be hypocritical here. As I've said, I think Michigan sentiment is wonky, okay, particularly the inflation expectations. I think that these are big enough misses that, number one, they make Friday's action even a bit more inexplicable, but two, they get my attention. And across the board, when I begin to put pieces of the puzzle together, and I think that this is an important statement to make for those of you that are trying to learn or trying to gauge the long-term prospect of your pipeline and your business and how you want to play it. It is hard to ignore the trend in employment, the retail sales number, the Michigan sentiment consumer portion of it, the business conditions portion of it. I think that this is all telling a story, okay? And I think that the story it's telling is that the consumer is starting to show the effects. And sometimes that takes time. I saw somebody on Facebook or something post, there's going to be a big gap down in rates in September. Listen, I've been talking about it. It depends on what your definition of big or gap is, but it's just increasingly becoming more difficult for me to believe that without external artificial influences, the Fed, oil, gas, that September is not a very accommodative month for interest rates. So we go back to this week, ADP tomorrow. I'm really interested about that. If we print a negative number, that's really interesting. Wednesday, Fed minutes. Thursday, we've got Philly Fed, which to me is more important than New York Fed, no offense. And claims. Friday, S&P. Next week, we've got nothing Monday, more housing and employment on Tuesday. Wednesday, we've got GDP because we've got a little bit of an interesting week next week because usually we get GDP on Thursday, right? So you got GDP, durables, PCE, very, very interesting. Not so much the GDP because it's the first revision, but the PCE. We've got claims. By the way, Jackson Hole starts Wednesday. We've got claims on Thursday. And in a very, very, very weird occurrence, doesn't happen an awful lot. We've got non-farm payrolls at 10. That's sort of that annual revision, right? And Michigan sentiment at 10. And Jackson Hole, kind of wraps up. So that's going to be a pretty interesting day to see how we kind of look at that and how we kind of trade that with everything kind of happening a little bit early within Jackson Hole and that kind of annual revision of non-farm should be a very interesting week. Bonds continue to be flat here on the morning, and there you have it. I would say that for August, you either lock because you dodged a bullet, or you continue to take on risk, and you hope that there's a little bit of a bump because of ADP tomorrow and because of maybe some weak housing data and everybody realizing, maybe why did we exactly run up rates on Friday with all this bad data? And to whatever extent there's pressure to make a deal here with our 60-day memorandum of understanding expiring, the next couple of days are going to be pretty interesting. And be careful. Bulls and Bears make money, pigs get slaughtered. Thanks for joining live, watching on replay, and I will see you guys tomorrow.